Started?
Yeah, good evening, and welcome to today's lesson. So today we are looking at the taxation I had shared earlier, a workbook for tax. I shall just do selected question there. May not be able to do all of them, but just selected questions on that particular workbook. Selected questions on that particular workbook. So the workbook for tax is what we are looking at. I'm giving you time. Maybe you had not opened that so that you can open, then you follow. So we shall look at a question on partnership and a question on employment. Partnership and employment, the two questions. And if time allows us, we may look at a third question. Yeah, I'll start with the partnership. So this one has 5 questions: partnership, employment, investment allowance, company, and VAT. So I'll start with the partnership. Yeah, question on partnership. Partnership. I'll start with partnership, and I will read through. I'll read through this question. So the question reads, Kamala, Susan, and Kubasu are in partnership trading as Kasuku traders, sharing profit and losses equally. They have provided the following statement of profit or loss for the year ended, that 1st December 2021. December 2021. So I've been given that particular statement, and they reported a loss of 29.56. Insurance premium include 22,500 paid to insure Susan's private car. Legal fee include parking fine, settling a dispute with the customer, appeal against tax assessment, court expenses for breach of contract, preparation of tender document. Sundry expense include registration of trademark, interest charged on hire purchase, cash embezzled by the cashier. Repair and maintenance comprise the following: repair of furniture, installation of surveillance camera, cost of office furniture. The partners took goods for personal use, which had cost price of 225. The gross profit margin was 20% as recorded in the partnership books of account. The investment allowance was agreed with the Revenue Authority at 1475,000 during the year ended that 1st December. Salaries and wages include salaries to partners as follows: Kamala, Susan, and Kubasu. And you are required the adjusted partnership profit or loss for the year ended at 1st December and the distribution scheduler. So remember, mostly when they test this question, they will distribute 20 marks. Yeah, they will be able to distribute the entire 20 marks on that particular question. So distribution schedule for the profit or loss computed. Yeah, so we deal with this one. So this is for the partnership, and they are trading as Kasuku traders. Kasuku traders. So Kasuku traders. Kasuku traders adjusted taxable profit or loss. Taxable profit or loss. So for the year ended that 1st of December. That 1st of December 2021. That 1st of December 2021. So that is our question. And so under this one now, we shall have our reported. They're just shillings. We don't have in 1,000. We're just picking the values as they are. As they are. So they are shillings. That way. So we shall start with the reported net loss. The reported net loss, whatever they had reported as a loss, whatever they had reported at a loss, they had reported a loss of this value, negative 29.56, and we add the non-allowable expenses. We add non-allowable expenses, and non-allowable, I may decide to start with note number 7, going backwards. It will be easier for me. So we shall have salaries, partner salary. Remember, we said partner salary is not allowed. Partner salary, partners salaries. So we don't allow partner salary. And our partner, we have Kamala, Susan, and Kubasu. Partner salary. Yeah, which workbook is this? Okay. So this workbook for tax, I had shared this workbook. I had shared this workbook. So let me reshare it. But when you go to the page, you'll find the workbook because already it was shared. It was already shared. But I will reshare it just in a moment. Just a minute, I share that. Yeah, I have reshared it back. So you can still get it in the wall. Yeah, you can still get it in the wall. That workbook, if you had not downloaded it. So we continue. Now you continue. So for the partner salary, I'm starting with note number 7. Note number 7 here, where we have that way. So that is our partner salary that we have. Partner salary. Remember, partner salary, we said we disallow the salary. We disallow the salary and we take them to the allocation schedule. We disallow the salary and we take it to the allocation. We take it to the allocation schedule. Disallow it and take it to the allocation schedule. The partner salary. Then number 6, we shall come back to it. The investment allowance is normally allowed. It's normally allowed. Then number 5, the partners took goods for personal use. So drawings made by partners are added back at cost. Partners drawings. And we normally add the drawings of goods. Drawings of goods. Because partners took goods. Drawings of goods by partners. Drawings of goods by partners is normally added back at cost. Added back at cost. Already they have given us the cost price. If it was a selling price, you are supposed to take it back at cost. Supposed to take it back at cost. At cost. You add it back at cost. That way. That is note number 4. Comprises repair to furniture that is allowable. Yeah, we are allowed to repair the furniture. Installation of CCTV, it is capital in nature. Yeah, installation of CCTV camera, that is capital in nature. And for the capital expenditure, normally say it will qualify for investment allowance. And even the cost of expenditure. The cost of expenditure will be part of a capital allowance. So it will be part of a capital allowance, part of capital allowance that way. So that is it for that point. So installation, it qualifies for investment allowance, and already they had given us the investment allowance. Already they have given us that, and even the cost of furniture. This is capital expenditure, which we do not allow. So repair and maintenance comprises, that one you're done with it. The sundry, registration of trademark, anything that we are registering, we normally say it is a capital, capital in nature. Capital in nature, whenever we are registering, or not even capital, we normally call it the preliminary. We normally call it the preliminary expense. Preliminary expense. Preliminary expense, whenever we are registering a patent, because we normally assume it is before the patent starts being implemented. So that one becomes a preliminary expense, which is not allowed. Interest charged on hire purchase is allowed, but cash embezzled. So whenever the cashier embezzles the cash, that is not part of the expense. That one is not part of expense. It is normally disallowed. Embezzlement by cashier, it is normally disallowed. It is normally disallowed. Then, after that, note 2, legal fee include, we have the parking fine. Parking fine, again, we don't allow, because once you park your car in the correct way or in the correct place, then you'll not pay the fine. The fine is as a result of violation of a law. When you violate a law, which you are not supposed, that's why you're incurring the fine. So parking fine is not allowed. Settling a dispute with a customer is allowed. I normally say the dispute may be concerning payment, and once payment is received, the amount will be taxed. So this appeal is not allowed. Appeal, once you pay the correct taxes, there is no need of appealing. Normally, appealing is when the taxman gives you an assessment, an estimated assessment or an amended assessment. When you have filed the wrong taxes, that is when the assessment will come in. When the assessment will come in. Then the other one, after assessment, court expenses for breach. Court expenses for breach is not allowed. The court expense for breach of contract. Once you breach the contract, that cost will not be allowed. The cost of breach of contract. Court expense for breach. And even preparation of tender. It is a preliminary. The tender is yet to be issued. Any cost that is incurred on preparation of tender document, that one is not trade contracts. Normally call it the trade contracts. So their costs are not allowable. The costs that we incur on trade contracts, they are not allowed. And number 1, insurance premium include 282,500 paid to insure Susan's private car. That is private expense. So private insurance expense. So it's not allowed. The private insurance expense. So we disallow that. 282. So 282,500 private insurance. 282,500. When you go back to the expenses, insurance, we have captured that. Legal, we have captured it in note number 2. Depreciation, we don't allow. Instead of depreciation, we allow the investment allowance. So we disallow the depreciation. Disallow that. And the other thing, apart from depreciation, repair, we have captured that. VAT, so we don't allow VAT. VAT is not an expense. Any tax paid, normally say any tax paid is not an expense. 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 Then, apart from that, sundry, I think we have captured sundry. Yeah, sundry, we have captured it in note number 3. Sundry expense. We have interest on capital. Yeah, interest on capital. That one we shall put that, the interest on capital. We don't allow the interest on capital. The first one is for Kamala. The second one is for Susan, and the other one is for Kubasu. So the interest you don't allow. Interest, we shall take it to the distribution. Shall take it to the distribution schedule. We take it to the distribution schedule. The distribution schedule. Motor vehicle is allowed expense. Custom duty is a form of tax. Any form of tax is not allowed. Custom duty is a form of tax. We do not allow that. Custom duty of 227. Then after custom duty, accountancy is allowed, bad and doubtful debt is allowed, rent and rates, and even the salaries. Yeah, all the others are allowed in that case. All the other expenses are allowed. So just need to get the total of this. The total of this expense. Yeah, that total. And the total of the two. The total of the two, that way. Just put the top border. And now we need to less the non-taxable here. Less non-taxable income. Non-taxable incomes. Non-taxable incomes. And for the incomes, non-taxable incomes, we look at the incomes. So VAT refund is not. VAT refund is not taxable. Yeah, because the VAT expense is not allowed. Therefore, once it is refunded, it will not be taxed. Once it is refunded as a result of paying in excess or in error, it will not be taxed. It will not be taxed, the VAT refund. So foreign exchange gain, we can make an assumption. Here they are silent. It is only taxed when realized. So for the foreign exchange gain, it is only taxed when realized. So you can make an assumption. Here you can put it and assume unrealized here. Assume unrealized. Unrealized. Remember, once you make an assumption, you are supposed to state your assumption that you have made. So you have assumed that that particular income is unrealized, and therefore it will not be taxed. Once you assume it is unrealized, then automatically it will not be taxed. It will not be taxed. So the dividend, again, dividend, they have not elaborated anything. Yeah, they have not elaborated where we got the dividend income, and it was net. Yeah, so we shall assume qualifying. Assume qualifying. Remember, qualifying the dividend that we get from companies. Dividend that we get from companies and SACCOs. Dividend that we get from companies and SACCO. And therefore, withholding tax is normally final. Withholding tax is normally final. And you have an option of assuming it is unqualifying, or what we call non-qualifying, the one that you get from a cooperative society. And if it is non-qualifying, it will be taxable, non-business income, but it is part of taxable income, part of the taxable income. But in our case, we're just picking the easier one where we shall not add it again. We just assume it is non-qualifying. Then after that, we have the profit on disposal of furniture. That one again is not taxable. The profit on disposal of furniture. Profit on disposal of furniture. Any gain or any proceeds from sale of an asset or an investment, that amount normally is not taxable. That amount normally is not taxable. We get the total of this, and we are taking a negative of that sum, negative of that, because whatever remaining is rental. Rental, we less it under what we call the non-business. We less non-business here, non-business income. And business incomes, that's what we shall less, non-business incomes. And business incomes, and it is only one, the rental income. And business income, only the rental income, here, only rental income, that way, rental income. Then we less allowable expense omitted, less allowable expense omitted is what was supposed to be deducted, but it was not. And what we have is the investment allowance. or capital allowance, investment allowance. And we are told investment allowance was agreed in note number 6. It was agreed at 1475. 1475,000. 1475,000. That is what was agreed. That is what was agreed. And we get our business income. Our business income here. We need a total of this, from this to that. Our business income, and in our case, even it's not an income, it is a loss. Yeah, business loss. Business loss for the year. So in that year, we made a loss of 148,500, and others can get a profit depending on the treatment of these. Whether you have treated especially the foreign exchange gain and the dividend income, whether you treat them as non-allowable, as non-taxable, or non-business, either non-taxable or taxable income, the way you treat it, but all of them will be correct. All of them will be correct. That is the first. The second part is whereby we are preparing what we call the distribution schedule, distribution schedule. Another name is the allocation, distribution schedule, or the allocation schedule, distribution schedule or the allocation schedule. And here we are having the three. We are having Kamala, we are having Susan and Kubasu, and we are having the total. We are having the total there, and we are starting with the interest, partner salary. Yeah, the partner salary we put for individual, partner salary for each individual. So Kubasu had that, and here we just put the total of that, and you can get the total there. Then we have interest on capital. Whatever we paid them, interest on that capital. And for the capital, we had it here, the interest on capital, 407 for Kamala. Susan had 450, and Kubasu had 220, and 146. So this one, Susan was 185. The first one was the one that was 407, 407. And we get the loss share. Then business income. Business loss. In our case, we have a loss here, and our loss was this value. So here, from that loss, we shall minus this. We shall pay these two from the loss, meaning that whatever they will share, it will be a very big loss. The negative is what they will share, and they were sharing in the ratio equally. They were sharing equally. Equally means divide by 3. Divide by 3. So the same value, we divide by 3. Yeah, we divide by 3. Yeah, that way. And we get this total. That way. Yeah, that way. Then we have other income. Other incomes. And for other incomes, we have the rental. What we have deducted here as a non-business, the rental income. We had a rental income of, we'll put a negative 415. You share it again equally, whatever they were getting. We are dividing by 3 so that you can get an equal amount for each one of them. And you get your taxable income. The taxable income, yeah. We take this plus. that plus this, and we autofill this. Yeah, and that is it. That's our question. That's our question. Can you repeat on the business loss and the share? So for the loss is what we got. Yeah, what we got as the loss, and how we are sharing that. Yeah, business loss and the loss share. So here I will distinguish these by putting a bold. Yeah, let me highlight this and put this under that. So remember, the loss is what we made. The items that we had deducted here, specifically the one that we added specifically for the partner, we normally take it to the distribution. So partners are paid from the net profit or loss. From the net profit or loss, that is where we pay the partners. So whatever we paid as salary and interest on capital, it was paid out of the loss. Meaning that if this is the loss that they incurred during the year, and we paid these two, it means we made a very big loss, or whatever they will share is a very big negative. And that's why you have taken this minus these two to get the amount that they will share. To get the amount that they will share, this loss minus the two of them, because from the loss we shall pay interest and we shall pay the partner salary. Whatever will remain is what we shall share between the partners, what we shall share between the partners. And in our case, we have remained with 2162 in million, 2162,000, and it is a loss. We divide by 3 because they are saying they were sharing it equally. Yeah, they were sharing profit and loss equally between the three partners, equally between the three partners. And that's why we are dividing whatever remains. So this one we have gotten this minus these two. This one is what we have. We have shared these. We have shared that equally. We have shared that equally. Then the same with other income. Other income, which is a rental, and it was taxable because it was non-business income. So we share it again equally. We share it again equally among the partners. We share it again equally among the partners. So Bado loss share, okay, loss share. So you have said the way we have arrived at the loss, we have taken this business loss. Business loss for the entire year was 148,500. From the loss, we go backward. We are going backward, whereby we are taking 148. It is this way. So we are having our loss. If I can do this way, we are having a loss. And from the loss, we less partner salary, we less salaries, and we less the interest. We less the interest. We are lessing the salaries and we are lessing the interest. So we are lessing this salary and we are still lessing this interest. So whatever we shall get now, because all of them are negative, this total is what they will share, which we are getting as that value. That is what they're supposed to share, 2162,000. So this is what they will share as a loss after making payment of these two. Then this loss we share equally in the ratio, equally. So you're dividing just by 3, divided by 3 in order to get the amount of loss share. I believe now that one is clear on how we have arrived at that particular value, Yeah, that way. And that is for the partnership. That's a question on the partnership. Question on the partnership. So we go to the next. The next is for the employment. Yeah, the next is for the employment income.